Question 1. A small Florida-based healthcare company has recently experienced a cyber attack involving ransomware. The company's sensitive patient data was encrypted, and the attackers have demanded a payment to decrypt it. The company's cyber insurance policy covers cyber extortion but does not specifically mention ransomware. Based on the policy's wording and typical industry practices, what action should the company take to ensure they are covered under the cyber insurance policy? A. Immediately pay the ransom to stop further data loss and inform the insurer later. B. Report the attack to the insurance company to initiate a claim and then decide whether to pay the ransom. C. Ignore the ransom demand and focus on restoring data from backups without involving the insurer. D. Only notify the insurer after paying the ransom as no other actions are covered. Answer. B. Report the attack to the insurance company to initiate a claim and then decide whether to pay the ransom. Explanation. Under typical cyber insurance policies, especially in cases involving cyber extortion, the policyholder is required to report the incident to the insurer promptly. The insurer can provide critical guidance, such as whether paying the ransom would be covered under the policy, and assist with incident management. Cyber extortion coverage generally applies to threats involving ransomware, but insurers typically require notification to begin the claims process. Immediate payment of the ransom without notifying the insurer may lead to coverage issues or denial. This action aligns with standard claims procedures in the event of a data breach or ransomware attack. Question 2. Which of the following is NOT typically covered under a standard cyber insurance policy in Florida? A. Data breach notification costs. B. Loss of income due to system downtime from a cyber attack. C. Legal fees for defending against a data privacy lawsuit filed by a customer. D. Reimbursement for damages incurred due to employee negligence causing a data breach. Answer. D. Reimbursement for damages incurred due to employee negligence causing a data breach. Explanation. While cyber insurance policies often cover various types of costs associated with data breaches and cyber attacks, such as data breach notifications, A. Loss of income due to system downtime, B. And legal fees, C. Damages arising from employee negligence are usually excluded unless specifically covered under an endorsement. Coverage for negligence is often excluded as it is considered part of the operational risk of the company and not a direct result of a covered cyber incident. Insurers might provide coverage for data breaches caused by third-party hacking or other external threats, but the damage caused by internal employee negligence typically requires separate risk management strategies not covered by the standard policy. Question 3. Mr. Collins, the IT manager of a financial services firm in Florida, has just realized that the company's data system was breached by a phishing attack. The attackers gained access to confidential customer financial information, and it's unclear how extensive the breach is. Mr. Collins is trying to assess the situation and understand how to mitigate the damage. What should he do first according to standard cyber insurance practices? A. Notify customers of the breach immediately and begin offering free credit monitoring services. B. Contact the insurance company to report the incident and initiate the claims process before notifying customers. C. Ignore the situation and attempt to resolve the issue internally without involving the insurer. D. Wait for law enforcement to conduct an investigation before taking any further steps. Answer. B. Contact the insurance company to report the incident and initiate the claims process before notifying customers. Explanation. In the case of a cyber attack, the first step is usually to notify the cyber insurance provider and report the breach, as this allows for the timely activation of policy provisions like incident response, forensic investigation, and legal assistance. Policies often include specific protocols for breach notification, including whether the insurer or a third-party expert should manage communications with customers, which must comply with legal and regulatory requirements. Many insurers also require prompt notification to minimize damage and start any remediation processes. Waiting for law enforcement, D, or ignoring the issue, C, are both counterproductive because they may delay claims processing or result in non-compliance with the policy's terms. Question 4. Which of the following is a key reason why Florida businesses are increasingly purchasing cyber insurance policies? A. To cover losses from natural disasters like hurricanes that affect cyber infrastructure. B. To comply with the Florida Information Protection Act (FIPA) requirements for data breach response. C. To ensure protection against cyber extortion demands for ransomware attacks. D. To fulfill federal regulatory requirements for financial institutions under the GLBA. Answer. C. To ensure protection against cyber extortion demands for ransomware attacks. Explanation. Cyber extortion coverage, especially for ransomware attacks, is one of the primary reasons businesses are purchasing cyber insurance policies. Ransomware has become a significant threat, and businesses need coverage to help mitigate the financial impact of ransom demands. While the Florida Information Protection Act (FIPA-B) requires businesses to protect personal data, cyber insurance is not required for compliance, though it helps with the response. Natural disaster-related losses are generally not covered under cyber insurance, and the GLBAD primarily applies to financial institutions, not all businesses, in Florida. Question 5. When underwriting a cyber insurance policy for a large organization, which of the following is most important for determining the appropriate coverage limits and premiums? A. The organization's number of employees and its general revenue size. B. The organization's cybersecurity maturity and historical claims history. C. The total amount of personal data the organization collects from its customers. D. The organization's current business continuity and disaster recovery plans. Answer. B. The organization's cybersecurity maturity and historical claims history. Explanation. Underwriters assess the cybersecurity maturity of an organization and its historical claims history as the most important factors when determining coverage limits and premiums. A company with a strong cybersecurity posture and fewer past claims is typically deemed a lower risk and may qualify for lower premiums. While business size and data volume are considered, the organization's cybersecurity practices, including risk management processes and incident response capabilities, directly impact the underwriting decision. Business continuity and disaster recovery plans (D) are also important but secondary compared to cybersecurity maturity (B) in underwriting. Question 6. Which of the following would most likely trigger the third-party coverage in a cyber insurance policy? A data breach that involves the loss of personal information of customers, leading to legal claims for damages. B. A system downtime caused by a cyber attack that prevents customers from accessing online services. C. A phishing attack on a company executive that leads to unauthorized access to corporate data. D. An employee negligence incident that leads to a loss of client data with no legal claims filed. Answer. A data breach that involves the loss of personal information of customers, leading to legal claims for damages. Explanation. Third-party coverage typically applies when the organization is held liable for damages to third parties, such as customers or vendors, as a result of a cyber incident. In the case of a data breach that involves the loss of personal information, third-party coverage would likely apply to cover the costs of legal defense, settlements, and damages incurred by affected individuals. System downtime (B) and phishing attacks (C) are more related to first-party coverage, which addresses the organization's own losses. Employee negligence without legal claims (D) would generally not trigger third-party coverage. Question 7. Scenario-based. Mr. Lopez, the Chief Information Officer (EO) of a large Florida-based e-commerce company, receives an alert that one of the company's servers has been compromised by a malware attack. The attack caused a temporary shutdown of the company's online platform, resulting in a significant loss of revenue. The company has a cyber insurance policy that covers business interruption due to system downtime. What should Mr. Lopez do first to ensure that the company can file a claim for business interruption under its cyber insurance policy? A. Immediately attempt to restore the system without informing the insurer, as the loss is clearly related to system downtime. B. Contact the insurance company to report the incident, providing initial details about the breach before attempting system restoration. C. Wait for the system to be fully restored before contacting the insurer, as the claim must include evidence of complete downtime. D. Notify customers of the outage and provide compensation to affected clients before notifying the insurer. Answer. B. Contact the insurance company to report the incident, providing initial details about the breach before attempting system restoration. Explanation. Most cyber insurance policies require prompt notification to the insurer in the event of a covered incident, such as business interruption due to system downtime. The insurer can provide guidance on the claims process, help with forensic investigations, and ensure that the claim meets all policy requirements. It is important to report the breach immediately, even before system restoration, to ensure proper documentation and minimize the risk of claim denial. Attempting to restore the system without reporting the breach could jeopardize the claim. Delaying notification until the system is restored, C, or notifying customers first, D, are not in line with standard claims procedures. Question 8. Under Florida's data breach notification laws, which of the following is TRUE? Regarding the timing of notifying affected individuals, affected individuals must be notified within 15 business days of the discovery of the breach. B. Affected individuals must be notified within 30 calendar days of the discovery of the breach. C. Notification to affected individuals is only required if more than 500 individuals are affected. D. The notification must occur within 90 days of the breach, regardless of the number of affected individuals. Answer: B. Affected individuals must be notified within 30 calendar days of the discovery of the breach. Explanation: according to Florida's Information Protection Act, FIPA, businesses must notify affected individuals within 30 calendar days of discovering a data breach. This law applies regardless of the number of individuals affected. If more than 500 individuals are affected, businesses are also required to notify the Florida Attorney General. The 15 business day timeframe A is incorrect. The 90-day period D is also inaccurate, as the 30-day rule is mandatory. The threshold of 500 individuals C triggers additional reporting requirements, but notification to individuals is required for all breaches. Question 9. Which of the following is AST likely to be covered under cyber insurance policies? Privacy liability coverage. A lawsuit filed by customers claiming that personal information was exposed in a data breach. B. Legal defense costs for a company accused of violating data protection laws during a data breach. C. The cost of notifying customers of a data breach involving their personal information. D. Damages related to lost business opportunities due to the unauthorized exposure of customer data. Answer: D. Damages related to lost business opportunities due to the unauthorized exposure of customer data. Explanation: privacy liability coverage typically covers legal costs, damages, and penalties related to violations of privacy laws or the unauthorized exposure of personal data. This includes lawsuits filed by affected individuals. A. And legal defense costs for alleged violations of data protection laws. B. The cost of notification. C. Is also covered under many policies. However, damages for lost business opportunities D. Are generally not covered by privacy liability insurance, as they are considered indirect or consequential damages rather than the result of a direct privacy violation. Question 10. Which of the following is a common exclusion found in most cyber insurance policies? A. Costs associated with restoring data from backups after cyber attack. B. Damages resulting from cyber extortion, ransomware attacks. C. Losses due to employee theft of company data or intellectual property. D. Legal fees for defending against a data breach lawsuit filed by a customer. Answer: C. Losses due to employee theft of company data or intellectual property. Explanation: most cyber insurance policies exclude losses related to employee theft, including theft of company data or intellectual property, as this is generally considered an internal risk and part of the organization's own security and operational responsibilities. Costs for restoring data from backups A. And legal fees for defending against data breach lawsuits D. Are typically covered under the policy. Cyber extortion coverage B. Usually applies to ransomware attacks and is commonly included in cyber insurance policies. Question 11. Which of the following statements about cyber insurance claims related to ransomware is TRUE? A. Cyber insurance typically does not cover ransom payments but covers related expenses like legal fees and data restoration costs. B. Cyber insurance always covers ransom payments made to the attackers, regardless of the circumstances. C. Cyber insurance excludes all losses related to ransomware attacks, including ransom payments. D. Cyber insurance covers only ransomware attacks that affect critical infrastructure in regulated industries. Answer: A. Cyber insurance typically does not cover ransom payments but covers related expenses like legal fees and data restoration costs. Explanation: most cyber insurance policies do not directly cover ransom payments, as insurers often discourage paying the ransom given the ethical and legal risks. However, they typically cover related costs, such as legal fees, data restoration, and notification expenses. Some policies may offer specific coverage for ransomware attacks, but the payment itself is usually excluded or subject to limitations. Therefore, B, C, and D are inaccurate, as they do not reflect the typical coverage provisions for ransomware in most cyber insurance policies. Question 12. Which of the following types of cyber attacks is MOST commonly covered under a cyber insurance policy's first-party coverage? A denial of service DOS attack that results in a temporary outage of the company's website. B. A phishing attack that leads to unauthorized access to corporate email accounts. C. A data breach involving the loss of personal customer information due to a hacking incident. D. A business interruption due to a ransomware attack demanding payment in cryptocurrency. Answer A. A denial of service DOS attack that results in a temporary outage of the company's website. Explanation. First-party coverage typically covers direct losses to the organization itself, such as those caused by a DOS attack where the website is temporarily down and business operations are interrupted. Phishing. B. A data breach. C. In ransomware attacks. D. Might involve third-party liabilities or additional complexities, but would primarily be covered under different sections of a cyber insurance policies, such as third-party liability or specific endorsements like ransomware coverage. Question 16. Under Florida's Information Protection Act, FIPA, which of the following is REQUII, D to be done within 30 days of discovering a data breach involving personal information. A. Notify the Florida Department of Law Enforcement, FDLE, about the breach. B. Notify affected individuals about the breach. C. File a public report detailing the breach's cause and impact. D. Offer credit monitoring services to affected individuals. Question 13. Which of the following is the most likely reason for a company to experience an increase in their cyber insurance premium? A. The company has implemented a comprehensive cybersecurity awareness training program for all employees. B. The company has recently experienced a data breach resulting in financial losses and reputational damage. C. The company has strengthened its data encryption methods and improved its network security protocols. D. The company has reduced its risk of data breaches by discontinuing the collection of customer data. Answer. B. The company has recently experienced a data breach resulting in financial losses and reputational damage. Explanation. A history of data breaches and financial losses related to cyber incidents is one of the primary factors that can lead to an increase in a company's cyber insurance premium. Insurers may see this as an indication of higher risk, and the premium may increase accordingly. Implementing security measures A, C, or ceasing to collect data D may reduce risk, but they are unlikely to lead to a premium increase. Question 14. What is the purpose of a cyber risk assessment in the context of purchasing cyber insurance? A. To identify vulnerabilities in the organization's network that could lead to a data breach. B. To estimate the monetary value of the company's intellectual property and assets. C. To comply with state-specific cybersecurity regulations like Florida's FIPA. D. To determine the company's eligibility for a government cybersecurity grant. Answer A. To identify vulnerabilities in the organization's network that could lead to a data breach. Explanation. A cyber risk assessment is conducted to identify potential vulnerabilities within an organization's infrastructure and operations, including those that could lead to a data breach or other cyber incidents. This process helps to guide insurance underwriting by providing a clear picture of the company's risk exposure. The purpose is not to estimate intellectual property values, B. Comply with regulatory requirements, C. Or determine eligibility for grants, D. Question 15. Which of the following scenarios is most likely to trigger the coverage for data restoration under a cyber insurance policy? A. A hacker gains access to the company's database, corrupting essential business data that is used for customer transactions. B. A natural disaster causes physical damage to the servers where sensitive customer data is stored. C. A malicious employee deliberately deletes critical files from the company's cloud storage system. D. A software glitch results in the deletion of data that the company backs up regularly. Answer A. A hacker gains access to the company's database, corrupting essential business data that is used for customer transactions. Explanation. Data restoration coverage under a cyber insurance policy typically applies when a cyber event, such as a hacking incident, leads to the corruption or loss of critical business data. Insurance policies typically cover the cost of restoring the data or system to its original state. Natural disasters, B, and employee actions, C, are usually covered under different types of policies. Software glitches, D, may be covered by technology errors and omissions insurance, but are not typically covered by cyber insurance. Answer. B. Notify affected individuals about the breach. Explanation. Under Florida's Information Protection Act, FIPA, companies must notify affected individuals within 30 days of discovering a data breach involving personal information. The law does not require notifying the Florida Department of Law Enforcement, FDLEA, unless certain conditions are met. public reporting. C. Is not required by FIPA and credit monitoring. D. Is recommended but not required under the statute. Question 17. Which of the following is the most significant factor influencing the coverage limit for a cyber insurance policy? A. The company's annual revenue. B. The level of cyber risk identified in the organization's risk assessment. C. The company's security protocols and historical incident history. D. The geographical location of the company's offices. Answer. B. The level of cyber risk identified in the organization's risk assessment. Explanation. The level of risk identified in a company's cyber risk assessment is the most significant factor in determining the coverage limits for cyber insurance. This assessment helps insurers understand the company's risk exposure, which influences the amount of coverage needed, while revenue A and historical incidents C can be factors. The risk assessment B provides a more direct measurement of the company's exposure to cyber threats. Question 18. Which of the following would not typically be covered by a cyber insurance policy's network security liability coverage? A. A customer's personal data is stolen after a hacker exploits vulnerabilities in the company's network. B. A third party sues the company after data breach results in the exposure of confidential business information. C. The company is sued for failing to comply with data protection regulations after a breach of customer data. D. The company incurs damages due to a denial of service attack that disrupts online services. Answer. C. The company is sued for failing to comply with data protection regulations after a breach of customer data. Explanation. Network security liability coverage generally covers incidents involving network breaches, hacking, or data exposure resulting from vulnerabilities in the company's network. A. Third-party lawsuits related to data breaches. B. And damage due to denial of service attacks. D. However, coverage for non-compliance with data protection regulations. C. Would typically fall under regulatory fines or penalties, which are generally excluded from standard cyber insurance policies. Question 19. Scenario-based. A Florida-based e-commerce company suffers a ransomware attack that encrypts its entire customer database, including sensitive financial data. The attackers demand a $500,000 ransom. The company's cyber insurance policy includes a ransomware extortion endorsement. Which of the following is the first step the company should take? A. Pay the ransom immediately to stop the encryption of the data. B. Contact the cyber insurance provider to report the incident and get guidance on next steps. C. Notify law enforcement and avoid contacting the insurance provider. D. Attempt to decrypt the data using available software before notifying anyone. Answer. B. Contact the cyber insurance provider to report the incident and get guidance on next steps. Explanation. The first step should always be to notify the insurance provider. Many cyber insurance policies with ransomware coverage require the insured to report the incident as soon as possible to ensure proper coverage and assistance with the situation. The insurer may provide guidance on whether to pay the ransom and help coordinate the response. Paying the ransom may and attempting decryption D should be avoided until consulting the insurer. Notifying law enforcement C is important but should not replace notifying the insurer first. Question 20. Which of the following would most likely be excluded from coverage under a typical cyber insurance policy? A. Loss of revenue due to a cyber attack that causes a disruption in online services. B. The cost of public relations services to mitigate reputational damage after a data breach. C. Costs associated with monitoring the company's network for potential vulnerabilities. D. Fines and penalties resulting from violations of data protection laws after a data breach. Answer. D. Fines and penalties resulting from violations of data protection laws after data breach. Explanation. Most cyber insurance policies exclude coverage for fines and penalties related to regulatory violations. D. As these are considered punitive. Loss of revenue due to a disruption. A. And public relations costs. B. Are often covered under first-party or crisis management endorsements. Costs for monitoring the company's network for vulnerabilities. C. Would typically fall under the organization's own risk management and not be covered by cyber insurance. Question 21. Which of the following best describes the business interruption coverage typically offered under a cyber insurance policy? A. Coverage for the loss of income due to a cyber attack that disrupts business operations. B. Coverage for the legal costs associated with defending against a cyber attack lawsuit. C. Coverage for the cost of restoring corrupted data after a cyber attack. D. Coverage for damages caused by physical destruction of business property from a cyber attack. Answer A. Coverage for the loss of income due to a cyber attack that disrupts business operations. Explanation: business interruption coverage is designed to cover the loss of income when business operations are disrupted due to a cyber event, such as a ransomware attack or network outage. Legal costs: B. Data restoration. C. And property damage. D. Are generally covered under other specific types of coverage in the cyber insurance policy. Question 22. Under Florida law, which of the following is not a requirement for an organization to comply with after experiencing a data breach involving personal information? A. Notify affected individuals within 30 days of discovering the breach. B. Notify the Florida Department of Law Enforcement, FDLE, within 30 days. C. Provide a description of the breach and the types of information involved to affected individuals. D. Offer credit monitoring services to affected individuals at no cost for at least 1 year. Answer B. Notify the Florida Department of Law Enforcement, FDA, within 30 days. Explanation: under the Florida Information Protection Act, FIPA, organizations must notify affected individuals within 30 days and provide details about the breach, including the types of information involved. C. However, the law does not require notification to the Florida Department of Law Enforcement, FDLE, unless certain conditions apply, such as a significant breach involving sensitive data. Offering credit monitoring, D, is recommended but not mandated by the law. Question 23. Which of the following scenarios is an example of a third-party liability covered by a cyber insurance policy? A. A hacker gains access to the company's customer database, exposing customer financial information. B. The company experiences a network outage, causing a delay in delivering goods to a client. C. The company's website is down due to a denial of service attack impacting customer sales. D. The company is sued by a vendor after a security breach leads to data loss on the vendor's system. Answer D. The company is sued by a vendor after a security breach leads to data loss on the vendor's system. Explanation: third-party liability coverage is designed to protect an organization when its actions or lack of actions cause harm to another party, such as a vendor or client. Scenario D is an example where a company faces a lawsuit from a vendor due to a data breach that impacts their systems. Scenarios A, B, and C primarily involve first-party losses or business interruption rather than third-party liability. Question 24. Which of the following would most likely fall under the extortion coverage of a cyber insurance policy? A. A hacker demands a ransom in exchange for decrypting the company's encrypted data after a ransomware attack. B. A customer files a lawsuit against the company for the loss of personal information in a breach. C. A company experiences a data breach resulting from a phishing attack leading to financial fraud. D. A denial of service attack disrupts the company's online services, causing financial losses. Answer A. A hacker demands a ransom in exchange for decrypting the company's encrypted data after a ransomware attack. Explanation: extortion coverage typically applies when an organization faces a situation where it is coerced into paying a ransom or dealing with threats such as in a ransomware attack. A. Phishing fraud. C. Lawsuits. B. And denial of service attacks. D. May be covered by other parts of the cyber insurance policy but not under extortion coverage. Question 25. Which of the following actions would be LEAST effective in reducing a company's cyber insurance premium? A. Implementing strong network security measures and encryption protocols. B. Hiring a third-party cybersecurity consultant to assess vulnerabilities. C. Training employees on cybersecurity best practices and phishing awareness. D. Failing to address cybersecurity risks and having a history of multiple data breaches. Answer D. Failing to address cybersecurity risks and having a history of multiple data breaches. Explanation: failing to address cybersecurity risks and having a history of data breaches. D. Would likely lead to higher premiums, not lower. Effective actions like implementing strong network security. A. Hiring consultants. B. And training employees. C. All demonstrate a proactive approach to managing cyber risks, which can lead to lower premiums. Question 26. Which of the following types of damages is generally excluded from coverage under a cyber insurance policy? A. Loss of business income due to a ransomware attack. B. Legal fees related to defending against a class action lawsuit resulting from a data breach. C. Fines and penalties for non-compliance with data protection laws after data breach. D. Costs of restoring data after cyber attack. Answer: C. Fines and penalties for non-compliance with data protection laws after data breach. Explanation: cyber insurance policies generally exclude coverage for fines and penalties related to regulatory violations, such as non-compliance with data protection laws. C. The other types of damages, such as business income loss, A. Legal defense costs, B. And data restoration costs, D. Are typically covered under the policy. Question 27, scenario-based. A Florida-based healthcare provider suffers a data breach in which patients' sensitive medical records are exposed. The healthcare provider's cyber insurance policy includes network security liability and data breach coverage. Which of the following would likely be covered under this policy? A. The cost of notifying patients about the breach and offering credit monitoring services. B. The cost of a forensic investigation to determine how the breach occurred. C. The legal fees for defending against a class action lawsuit filed by patients affected by the breach. D. The cost of public relations efforts to manage reputational damage due to the breach. Answer: C. The legal fees for defending against a class action lawsuit filed by patients affected by the breach. Explanation: network security liability and data breach coverage typically cover third-party claims resulting from a breach, such as legal defense costs for lawsuits. C. While costs for notifications, A. Forensic investigations, B. And public relations efforts, D. May be covered by other parts of the policy, legal fees are directly tied to third-party liability. Question 20. What is the primary difference between a claims-made and an occurrence policy in cyber insurance? A. A claims-made policy only covers incidents reported within the policy period, while an occurrence policy covers incidents that happen during the policy period, regardless of when the claim is made. B. A claims-made policy covers only incidents that occur during the policy period, while an occurrence policy covers incidents reported during the policy period. C. A claims-made policy covers incidents that involve third-party liability, while an occurrence policy covers only first-party losses. D. A claims-made policy is more expensive than an occurrence policy because it provides broader coverage. Answer: A. A claims-made policy only covers incidents reported within the policy period, while an occurrence policy covers incidents that happen during the policy period, regardless of when the claim is made. Explanation: a claims-made policy provides coverage only if the claim is made during the policy period, even if the incident occurred prior to that period. An occurrence policy, on the other hand, covers incidents that happen during the policy period, regardless of when the claim is filed. This is the key distinction in the timing of coverage. Question 29. Which of the following is a potential benefit of purchasing cyber insurance for a small business? A. Reduces the need for the business to implement cybersecurity practices. B. Provides a fixed payment for all costs associated with a cyber attack. C. Provides access to expert resources, such as forensic investigators and crisis managers, to help mitigate a cyber event. D. Guarantees complete recovery of all lost or stolen data in the event of a breach. Answer: C. Provides access to expert resources, such as forensic investigators and crisis managers, to help mitigate a cyber event. Explanation: cyber insurance can provide access to resources such as forensic experts, legal advice, and crisis management to help minimize the damage of a cyber attack. It does not eliminate the need for cybersecurity practices. They provide fixed payments, B, or guarantee complete recovery of data, D, but it helps mitigate the costs and impacts of an event. Question 30. What is the primary purpose of a waiting period ECA cyber insurance policy's business interruption coverage? A. To allow the insurer to investigate the cause of the interruption before approving a claim. B. To ensure that the interruption is due to a covered event, such as a cyber attack. C. To provide a period for the business to attempt to resolve the issue without relying on the insurance coverage. D. To prevent fraudulent claims by ensuring the business has exhausted all other means of recovery. Answer: B. To ensure that the interruption is due to a covered event, such as a cyber attack. Explanation: the waiting period in a business interruption policy is designed to ensure that the interruption is due to a covered event, such as a cyber attack, and not due to a pre-existing condition or other unrelated issues. It ensures that claims are legitimate and helps prevent fraudulent claims. It does not serve to investigate the cause. They give the business time to resolve the issue. C. Or exhaust recovery options. D.